Hey, what's up, guys? I'm Dan again from CryptoCamacho.com, where each day I teach you something about cryptocurrency and help you make more money in this crazy cryptocurrency revolution. Today, guys, wow, it has been quite a week, really last 1 or 2 weeks. We've seen some major crashes in the cryptocurrency markets. We've also seen some recoveries in the market, and I want to talk through that just a little bit because I want to make sure that everybody knows that this is normal and par for the course, guys. The crash that we just witnessed has happened multiple times in the past in Bitcoin's history, right? This time, however, it wasn't just Bitcoin that crashed, it was the entire cryptocurrency markets, right? And why is that? It's because every cryptocurrency is ultimately tied back to Bitcoin, right? Because the pairs that are traded on the exchanges, on Binance, on Bittrex, on Poloniex, on Liqui, like on all these exchanges, most of the pairs that are traded are Bitcoin to an altcoin, right? They're all traded back into Bitcoin pairs. So naturally, when Bitcoin goes down, all of the other coins go down with Bitcoin because it's all trading in the same on the same substrate, if you will. So today, like I said, I want to talk about the crashes, the recent crashes that we've seen with Bitcoin and with some of the other cryptocurrencies. And I want to explain to you guys why this is nothing to worry about. And this is, very, very normal and actually par for the course with not only cryptocurrency, but with really stock markets and any market dynamics in general. So recently we've seen, a high of 20,000, right? Bitcoin really reached almost 20,000 in December, at the end of December. And then it literally fell from 20,000 all the way down to, about 11,000, which was a 44% drop, right, that you can see right here. Then we see some recovery going on. And most recently, just a few days ago, starting on, January 15th, there was a major crash right here. Again, you can see the percentage was about 36%. So not tremendously huge, but if you compare it with the previous dip that took place, a week before that on the 6th, from the top there, from the 6th until that crash on the 15th, we're seeing about 48%, another about 50% drop, right? So in the last month, we've seen two very significant 50% drops with Bitcoin. And even a little bit prior to that, we saw about a 25% drop, right? So these things definitely happen. And I want to show you a few examples of how this has happened in the past and why, you can expect it in the future. And I want to give you some takeaways here on why this is important as you invest, as you hold your cryptocurrency, as you even day trade your cryptocurrency, why this is important and what you need to look out for so that when this happens again, you could be prepared. You could take your money out of the market before it actually happens, and then you could buy on the dips, right? On these low dips here. If you would have bought just the other day and you would have sold at the top, you would have made about 30% profit. If you would have waited and sold where it is at today, you would have made 23% profit, right? So pretty good margins there, pretty good profit percentages. But let's jump over to CoinMarketCap and look at this chart. So this is a chart of Bitcoin from October 1st, 2014 to December 31st, 2015, right? And you can see that there have been a number of equal, if not greater, drops that year in 2014 to 2015. I guess really throughout the October to 2014 to 2015, there's been some significant drops, right? So let me just show you out how this works, right? So at the the end of 2014 in November, we saw a high of Bitcoin's price at $434. But then all the way by the time we hit January 15th, again, January, right? The crash that just happened, it happened in January as well, right? So again, not anything new that we haven't seen every single year since 2014. So let me show you. So like I said, the top in, in November, middle of November, we were at 434 at the top, right? At the bottom in January, we were at 196. So 434 to 196. That is at least a 50% drop. That's more than a 50% drop, right? 434, 196, over $200. More than a 50% drop happened right there in 2014. It happened again, right, in November of 2015. So fast forward a year, literally almost exactly a year, we were at $468 per Bitcoin, and we dropped all the way down to, let's just get this right number, $311. So not quite the same, but still about a 40%, about 30 to 40% drop. Again, happened at the same time. Let's fast forward a little bit now. Let's make this 2015. Let's fast forward 1 year, and we'll make this 2016. And I just want to show you this. Bear with me here for just a moment. 2016, 1230. Okay. This isn't letting me do the chart, but let me jump over to the Coinigy here. So if we go to, all right, guys. So now fast forward to 2016, and let's look at the drops that we've seen in 2016. I jumped over to Coinigy because I was having problems with CoinMarketCap's website. So trusty Coinigy will help me figure this out. So if we look at 2016, and in June, we see a similar drop here, right? We see the top being at about $770 per Bitcoin. We see a crash of about 26% down to 566. Not quite so bad, right? But another pretty decent drop. We see again another one right here in January of 2017, right? So last year at the exact same time, around January, right? That seasonal time, right after December, we saw a big boom in December, and we see another crash, right? This crash in 2017 in January was about 36%. Again, a pretty significant crash, right? Fast forward, keep fast forwarding. Again, we see a huge crash in 2017 in May. And this crash was pretty significant, right? We see all the way, it's a 56, 57, almost 58% crash in May of 2017, guys. So this recently happened. And it happened again in, in June, just the next month, we see another crash of 36%. And what am I getting at here? That this is not uncommon. Again, we see a crash here. Let's see, how big is this crash? 31%. They're averaging anywhere between 25 to 30%, all the way up to 60%, I would say, about 55%, right? And it's happened repeatedly over time. You see a big run up, you see a crash. You see a big run up, you see a crash. Again, same thing happened this year. 2018, this looks bigger, right? Because the prices are bigger. They've gone up a lot more. So the graph looks bigger, but the actual percentage of drops are very, very similar to historically to what they've been, right? Like I said, the most recent one, 44% drop from the high. And then just the last one the other day, about 47% down from the high, right? So what am I getting at here, guys? This has happened in the past multiple times, right? Probably a dozen times Bitcoin has crashed. This time it was a bit bigger because all of cryptocurrencies crashed, and historically we can go through and we can kind of do the same thing. And what I want you guys to get from this is that this happens very, very periodically, frequently in the cryptocurrency space, so you should be expecting it. So what lessons can we learn from this market crash from the last time around, and how can you prevent this from happening again? So these lessons I want to go over very quickly with you guys, because I think it'll help you think about, as you're holding cryptocurrency, as you're buying and selling cryptocurrency, how you can anticipate these crashes, how you can capitalize and actually profit from these crashes that are going on. So the first lesson that I want to impart with you guys about the crash that recently happened is that crashes are a normal part of market correction. Think about it. When you have a run up like we've seen, and I could just show you, we had a run up, from November 15th, like the beginning of November. Let's see. Okay. From the beginning of November all the way through December, we have a run up of 272%, almost a 300% run up. And you see a correction, right, of 40% here and 40% here. So an 80% correction on a 300% profit, right? That makes complete and logical sense. Run-ups cannot go forever. They have to correct themselves. So they run up and then they do correct themselves, and the base of where it equalizes is actually stronger than the previous base. Again, if you look back at the charts, every crash that we've seen has led to a higher and higher floor for Bitcoin, right? And you can see that all the way up, right? And it continues to be up. Now this is the floor. 11,000 right now seems to be the floor, and we'll probably see another upward trend. We'll see another crash, right? So that is to be expected. Number two, crashes should be anticipated and not feared. When you see a massive run up like this, you could almost expect a crash to be inevitable. I mean, it's coming. It's just, when is it coming, right? Is it going to come here? Is it going to come here? Is it going to come here? Come here, come here. You don't know exactly when the crash is going to happen, but the crash will eventually happen if the run up is large enough. So what I'd recommend is, when you see run ups that are higher than 30, 40, 50%, that is a sign that you need to be actively watching for the drop, for the panics, for the sell-offs, right? That's common sense, common knowledge. in any market that you do that. And even if you don't sell right at the top, and I've made this mistake myself, a few times, if you don't sell right at the top, if you sell halfway down or 3/4 of the way up, you're still going to come out on top with a significant profit. So don't always strive to sell at the very, very top, because what happens is the crash happens very, very quickly, right? And often when you're trying to sell at the top, you're going to end up selling down, lower than the top anyways, because the crash is so quick. So that's number 2. Number 3, Bitcoin and cryptocurrencies are extremely volatile. Most people would say that's a bad thing. That's a dangerous thing. Not me. That is actually a fantastic, fantastic thing. You know why? Because you can buy on the dips, guys. If you were to buy here, if you were to buy here, if you were to buy here, 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 on any of these dips, if you would have bought anywhere within the range, right? Anywhere within here, anywhere within here, let's see, anywhere within here, anywhere within here, you would have come out up on top and made money. And that's what I've been trying to tell you with my base trading methodology, is that you buy on the dips, guys. And when you buy on the dips, you're buying at the low. You're buying at the prime time to buy. And following my method again, look, if you were to follow the charts and you were to mark that as a base and you would have said, okay, that's my base. Well, the next crash, which was right here, you could have bought anywhere right here and you would have still come up past the base. Same thing goes right here. There was another crash, right? Here's the base. Here's the base. Here was the recent crash. We're way below the base right here. If you would have bought anywhere right here, you would have already made all of your money back and then some, right? And this is likely going to go back up. It may go down, but the next time there is a crash, mark this down as your base. This is definitely a base, right? This is a $9,000 price point for Bitcoin. It's the floor that people will not let it go below, at least right now, right? So next time the price does go below 9,000, if it does, it's going to be an awesome time to buy. Same thing here, guys. So that's reason number 3. Reason number four is that crashes coincide with speculative run-ups. So we've already kind of touched on that a little bit, but if you see the run-ups here, right? I mean, speculative run-up. Why did this run up? There's a variety of reasons why this ran up. Mass adoption was taking place. The media was publicizing Bitcoin. It was getting into the mainstream news, mainstream media. That's why we saw this big run up. It was speculative. It was fear of missing out. People didn't want to miss out on it, so they're buying and buying and buying and buying and buying. And what happens after that? We see a crash. Boom. That's point number 4. Point number 5, crashes coincide with government regulations and hacks and so forth. If you remember back to, I think it was a couple of years ago, Mt. Gox crashed, went out of business, right? We saw a huge dip. That was one of these dips. Recently, Bitcoin, if you search for Bitcoin crash, you're going to see that the reasons why this week's Bitcoin crash was all about fraud and regulation, right? There was hacks. There were rumors of South Korea banning cryptocurrencies. There were new government regulations coming out about how the US should handle cryptocurrencies. All of these different things have been coming out, which has led to fear, uncertainty, and doubt, to FUD, right? And that's why these crashes have been happening. So that's number 5. Number 6, guys, historically, Bitcoin has always recovered. Now, will this always be the case? I don't know. I don't think it will always be the case, but I do think it will be the case for at least the next year or for the, the near foreseeable future, right? And actually, there was a professor today, I think it was a Yale professor, let's just see. And I think he said that Bitcoin is definitely a bubble, but that Bitcoin could be here for 100 years, but it's more likely to totally collapse. So this guy from Yale is saying, Bitcoin is definitely going to collapse, but it could be here for 100 years. So that doesn't really tell me anything, right? That's like me saying I'm going to become immortal with genetic technology, but it could be in 1,000 years. Like, that doesn't tell you anything, right? But what it does tell me is that historically, Bitcoin has always recovered, and likely it will in the near foreseeable future, right? And that kind of confirms that for me. Number 7, guys, crashes can be avoided. They can be. When you see a run up that is bigger than I said, like, 30%, 20%, 30, 40, 50%, when you start getting into those ranges, that is a clear indication that we're seeing a run up, right? I mean, even, let's see, you can even see some red. Let me go back to the chart here. You can even see some red here. On the run up, you do see a dip, right? So from the last run up, let's just start here. Right here, we see a 153% run up. Okay, there's going to be a correction. Boom, there's the correction, right? again, we see from this, we see, let's see. If I look at the charts a little differently, here's another correction too. You just can't see it quite so well. Another correction here, another correction here. So they are all over the place, and you can avoid them if you watch them. You do have to watch for the charts. You do have to know a little bit of technical analysis, but you can certainly watch them. And one little trick that I use to watch for crashes is when the stochastics are starting to go down. Let me get into like more of a modern chart here. When the stochastics are starting to go down, and let me show you what I'm talking about here. You can bet that there is going to be a crash. So see, here's the stochastic here. It's going down, 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 and there's a trend going down, right? It's hard to always see this, but you can see it. If you look in these charts, you can see it. There's been a downward trend here. You know, we had an up, now it's starting to go down a little bit, right? So you can see it in the stochastics. You just need to know how to read them a little bit. Anyway, I wanted to make this video to let you guys know that the crash we recently saw is not out of the ordinary. It's typical. Don't believe everything you're reading in the news that Bitcoin is going to collapse. Everything is over. Cryptocurrencies is over. It's not the case. This is very, very common. It's happened the same time for the last like 3 or 4 years in a row in December, January, February timeframe. And we're likely to see another one this year, right? We're likely to see another couple this year. So be watching for them. Sell when you're high. Buy on the dips. When everybody else is selling and panicking and running and there's blood in the streets, what do? You buy. When everybody else is greedy, meaning when the prices are surging up and everybody else is greedy and they want to make more and more and more and more money, you need to sell. That's when you need to get out. When everybody is panicking and selling and running away and saying everything, the hell's about to freeze over, that is when you want to buy. I think Warren Buffett said that the best, right? When there's blood in the streets, you want to buy. Keep that in mind, guys. I'm Dan from CryptoCamacho.com. If you haven't subscribed, please subscribe to my YouTube channel, and I will give you daily updates and help you make more money in cryptocurrency. Thanks, guys. Talk to you later.